Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are, as always, coming to you live from the CNBC-TV18 Motilal Oswal studios. And, of course, over the next 2.5 hours, we'll track markets, corporates and everything. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Morning.
Hey, good morning. It's just like one of those days, right, when, or one of those weeks rather, when nothing much is happening. There's no major trigger. So it's just kind of status quo, perhaps.
It's quiet, right?
It's quiet, yeah.
But the quiet was
good.
Quiet is good. all quiet. But, it was not very quiet towards the end yesterday. Things did accelerate on the downside. And I think that's the risk here. This is what we were saying yesterday, that maybe, not very much in terms of cues new. We pick up from where we leave off on Friday. US markets, of course, were shut last night. So, again, this morning, there's not very much in terms of fresh cues to trade off. I think, what you should pay attention to, of course, one is US futures, which will pick up volumes by mid-afternoon or so our time. But I think US Treasuries and how US Treasury futures trade through the course of the day, I think will also set the tone. The reason I'm saying that is because, once again, what US Treasuries do have become a stark reflection of what market expectations of US interest rates are going to be. And they've been going up and up. So the last full session with regards to US rates market was Friday. And there we have, the price action gives us some hope. What happened on Friday? Basically, we saw a breakout attempt on the 10-year US Treasury yield above the turn of the year high, which was 3.89%. We got to almost 3.91 at the day's high on Friday, US session. But then it was quickly rejected. We ended about 10 basis points lower. And many are paying attention to the price action from Friday to say that maybe things have stretched on too much in one direction, and perhaps there is perhaps a period of consolidation, a period of cool-off ahead, and I think that should give some breathing space. But, this is just kind of reading the data from the price action on Friday. We get real prices, all day today, and I think that perhaps should set the tone more than US equity futures, etc., which, of course, unless and until they themselves see some big moves, that becomes the primary driver. This week is also important for geopolitical reasons, and I think we've not kind of spoken about this. Markets tend to price everything and they move on. The incremental impact keeps reducing. I said this when the Adani Hindenburg news story broke. And just think about it. It's going to be 1 year since the Russia-Ukraine conflict broke. It broke on the 24th of February last year. A full 1 year has passed, but we kind of talk about it very, very occasionally now. But because it's the 1 year anniversary, things perhaps could pick up. There could be event risks lined up this week. So today, for example, we've got the Russian President Putin, who's going to deliver a State of the Nation address. The time is about 2:30 or so, 2:30 or 3 in the afternoon, our time. So I think markets will pay attention, especially after US President Biden reaffirmed their support to Ukraine by sort of making an unscheduled stop in that country, pledging another $500 million in military aid and more. So I think, in that sense, this becomes important to kind of track. Let's just come to the market here, right? The Nifty, as I said, it was all quiet. But starting about 11:30 or so yesterday, things started to slip. The final close was 0.5% lower, which was about 95 points. We ended near the 20-day moving average, which is at about 17,838. The close was 17,844. So practically, you were dancing on that level, 20-day moving average. And that kind of becomes the pivot in either direction, on the upside or the downside, depending on which way the market closes, that the 20-day comes into play. If you do get a slip, I think the low that we saw recently of 17,720 should not be broken if the correction were to continue. The SGX this morning is indicating an absolutely flattish kind of start, very tentative. So I think we'll have to give it some time. The Bank Nifty, the second other benchmark index, bounced off a level we highlighted yesterday morning. Actually, it bounced off exactly off those levels. 40,699 was that level. We closed at 40,702. So, it held, I think, I shouldn't say bounce off. That's the 50% retracement of the up move that we've seen from the 30th of Jan to the high of 16th of February. So again, that becomes pivotal. And the next support, in case things start to slip again today, is 40,400, which is about 400, 500 points lower from where we left off yesterday. That's a 61.8% retracement, the golden retracement of the same up move from the close in January, 30th of January to the 16th of February high. So these are some levels to watch out for. I mean, it should be, hopefully, fingers crossed, a quiet session and perhaps a consolidation kind of a session and not a slip like what we saw yesterday. But we'll find out. And I think, with all that is happening on the global front, especially the US rates market, it should have a continued influence as well. Guys, hi, morning.
Hi, morning. Absolutely. It's really a lackluster market, right? I mean, insipid as well.
Yeah.
If you look at what happened intraday, there's a lot of volatility. So yesterday, the Nifty fell, 150 points from the day's high. So in that context, intraday, there's a lot of movement. But by and large, the headline index has not moved anywhere in the last 1 month. In fact, it's facing resistance at the 18,000 level on the upside. And the market has now closed below the 20, 50 and the 100-day moving average. So, these are a few markers, 17,800 on the downside and 18,000 on the upside. Now, there was selling once again by FII. So it's been 2 days of consecutive selling, almost 800 crores of selling from FIs in the last 2 trading sessions. So that's not a good thing. And I'm watching the financials very closely because that continues to be a bit of a drag. So in the last 1 month, the Nifty Bank is down about 5%, and that's been dragging the overall market as well. So let's see how that shapes up. Now, a couple of things that you want to watch out for today. And through the course of the week. It's F&O expiry week, so that assumes importance. Also, you have the Fed minutes that come out tomorrow, and that will give you an indication of how aggressive or, what the rate hiking cycle could continue to be from the Fed. Remember, the fight against inflation is not over just yet, so the Fed minutes do assume importance tomorrow. And then you have a lot of earnings coming out from corporate America tomorrow over the next couple of days, whether it's Walmart, Home Depot. You'll get a sense of which way the consumer trends are shaping up, because there as well, there is an expectation that as we head into a global recession, consumption has slowed down both globally as well as in India. So, I'm going to track a couple of these things. But by and large, you want to watch out for 18,000 on the upside and on the downside, a couple of the levels that, Prashant was mentioning. Today is going to be a really quiet day. The US markets were shut overnight as well. So let's see how the cues shape up.
Well, that's right. Taking everything into consideration, I'm wondering whether or not a bounce is due. And the answer could be probably yes. If your gut is that 17,750, 17,720 odd level will hold out, then we are trading at the lower end of the band. We're only around 80, 90 points away from those levels. The PCR has moved to around 0.74. Remember, normally when it moves to around 0.7, we see a bit of a bounce. And the FIs have added shorts, so they're slowly moving towards that 80% odd mark. The calls are being written very aggressively. Gay abandon, we're just seeing call writing has become too easy. So maybe the bears are getting a little complacent. Yesterday's fall, I'm not too worried about that because the institutional participation was really not there. The volumes were very, very low. If you're looking at the gross volumes, the FI gross volumes were 40% lower in comparison to the average that we saw last week. And even the DI participation was lower. It was around 12% lower in comparison to the gross volumes that we saw in the past week. So the fall came on very low volumes. What do the FIs do in the F&O market? Well, they added shorts. They added close to around 7,500 short contracts. The short positioning is moving towards around that 80% odd mark. They bought more calls than puts, but they're writing calls very, very aggressively. And yesterday as well, they wrote close to around 3 calls for every 2 puts. And just take a look at that. 17,900 calls, 18,000 call. Between them, there was close to around 80 lakh shares getting added out there. So there was very aggressive writing being seen at those levels. The Nifty Bank, well, that needs to give up this underperformance. Last 3 sessions, it's down close to around 1,000 points odd. We need to defend that 40,400, 40,500. If that is the case and if it could perform a little bit, at least for a couple of trading sessions, then we are bracing for a bit of a bounce. But it's crucial that we hold on to the recent low. That's a 17,720 and the psychological level of around 17,750. And maybe, in fact, we bounce towards that 100 and the 50 DMA, both those levels up for you on the screen. So the SGX 50 is suggesting a bit of a quiet start. But there are, various parameters in there that could lead to a bit of a short covering bounce. Let's see whether or not it plays out today, guys.
Okay, well, before we start, let's tell you what's lined up in the next half hour of the show. We'll get you a lot of updates from the markets across the globe. Mark Matthews of Bank Julius Baer and Company will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with our market expert Prakash Diwan. So do stay tuned in for that. But first up, let's begin the day with some cues coming in from, the global arena. Jonathan Garner of Morgan Stanley has put out a note where they say the US dollar has stopped falling, geopolitical risks are rising again, and concerns remain over a prolonged downturn in semiconductors. But forward earnings estimate revisions are inflecting upwards. Valuations remain low, and China's economy is recovering rapidly, and fund flows can probably build. He says they prefer China, Korea, and Taiwan to the ASEAN region and India, and are overweight on the IT sector.
Okay, some money market views as well. Bhaskar Panda of HDFC Bank says overnight dollar index is holding around the 104 levels, while oil prices remain firm on the hope of China recovery. In India, he says recently released trade data showed exports have declined at the back of tepid global demand. He says today, Asia ex-Japan currencies seem to be poised for consolidation, and hence he expects the dollar INR pair to trade in a range of between 82.65 to 82.85 to a dollar. Bhaskar says recent inflation data has brought back the specter of another rate hike, possibly a possibility in the April MPC meet.
Okay, and on the bonds, Bhaskar Panda says bond yields have mildly moved higher. He expects a range-bound movement in the yields today. He says the 10-year benchmark bond yield is likely to trade in a range of 7.35 to 7.40% for the day.
Well, a lot of stock-specific action to track for you, and we get to that in just a bit in our special Top 10 segment. Well, we're looking at Bharti Airtel, ACC, Ambuja Cement, Tata Power, Adani Power, Kotak Mahindra Bank, GR Infra, Minda Corp, Precall, as well as Interglobe Aviation. All stocks are likely to react to positive news flow. Good start, guys.
Okay, good start. Well, but lots to talk about in terms of cues for the day.
Oh, absolutely. And let's kick this off with the global setup. Mark Matthews of Bank Julius Baer and Company is now joining in to take us through exactly that. Mark, great to have you with us here. Thank you very much for your time. I don't know if you have a sort of near-term view, Mark, looking at the price action from last Friday in the US. Equities bounced off the lows. Yields sort of looked like they were threatening to break out above the turn of the year highs at about 3.9, but they ended lower. And the dollar also pulled back from the highs. Possible that we perhaps see a bit of cool-off consolidation and not up and up, at least in the yields and the dollar market? What's your sense?
Well, my sense, Prashant, is that it does all come down to inflation. We thought we'd put the inflation argument behind us, and it was a 2022 story. Unfortunately, it's still very much a 2023 story because the U.S. economy is simply not behaving in the way that anybody thought it would. It's incredibly strong, and the retail sales for January proved that point. Particularly, I thought what was interesting was the huge increase in spending in bars and restaurants, up 25%. So Main Street America is really doing well. Totally contradicting all of those lead indicators that were telling us we're going into a recession. And therefore, people are thinking that inflation will remain high and the Federal Reserve will be tenacious in raising rates. So simply put, I think that if bond yields continue to rise on the idea that inflation stays high, stocks will give up all their gains. But if they roll over, then I think stocks will keep their gains. And to your point that the 10-year failed to breach the 4% level yesterday, to me it looks like that most important benchmark is indeed rolling over. Now, having said that, let me also add that historically, the period from November to the middle of February has been the best for stock market returns over the years on average. And of course, we just passed that last week. Now we're the 21st of February. So we have exited that seasonally wonderful period of the year. And I think putting it all together, we're in a consolidation phase, which means we either go sideways or possibly down a little, but I just don't think very much.
So this is a consolidation phase, Mark, that India has been in for a while, right? I mean, this year, so far, in the last 2 months, we've done nothing much on the headline index. The sentiment is a bit on the lower side as well, and bulls are on the back foot. Do you reckon this could be the order of the day over the next couple of months? And what is your investment strategy now?
Yeah. Well, there were two things, weren't there? First, there was the whole Adani imbroglio. And secondly, there was the inflation, which in India also remains higher than what we had hoped and what we were comfortable with, and so suggests a more hawkish RBI. I don't mind that, either of them, actually. I think the Adani story is moving in the rearview mirror already. And I do firmly believe that commodity prices will remain well behaved and eventually come off. I mean, natural gas prices have collapsed in the Western world. I don't know if you've noticed that. And so I think that inflation globally will trend to the softer side. And I don't see those two things which are responsible for India having gotten off to a fairly mediocre start persisting through the rest of the year.
All right. Hi, Mark. Mark, whenever you join, we talk about India, China, the US markets, but a couple of these European markets are doing well. The FTSE's made fresh high. The CAC as well has, moving to record highs out there. Any view on the European markets? They're quietly moving up.
Yes, I've noticed that too, Nigel, particularly the UK, and I can't comment on it. I apologize. I mean, it is a very commodity and financial heavy index, the FTSE. And so if those are going up, I can't really explain why. I don't know. I mean, possibly the view that higher rates are good for financials. Sorry, I can't answer that question. But for the record, let me just say that we don't really like European stock markets with only two exceptions, which are Sweden and Switzerland. And I know they're small, but they're excellent. They have high quality companies that are either number one or number two in the world in what they do. And they have a long history of treating minority shareholders with respect.
Mark, it's the market's job to think price in things very quickly. And in that sense, the Russia-Ukraine war is a year old, but also because it's kind of now in the backdrop, right? I mean, it's continuing and we hit the 1 year mark this week. Could that throw up surprises, you think? I mean, through the course of this week and, the next few, in terms of how they impact markets, does that become relevant again? Yeah.
I think it does become relevant. Unfortunately, it's moving in a bad direction. During the Vietnam War, this is what they called the quagmire of war. Quagmire is like a sticky mud that you get stuck in, and you make one small decision which seems reasonable at the time that leads you to another decision which also seems reasonable, and sort of a whole sequence of little decisions, and before you know it, you're stuck in the mud and you can't get out. So 2 weeks ago, there was a red line in the sand that they were not going to sell F-16 fighter jets to Ukraine. And now Chris Coons, the Democrat senator for Delaware, who's also a close friend of Joe Biden, said at the Munich Security Conference that they're going to sell F-16s, or I guess give F-16s to Ukraine. And at the same time, Wang Yi, the foreign minister of China, is in Moscow today. It's not moving in a good direction, and I think it's going to expand potentially exponentially if NATO really is serious on countering Russia bullet for bullet. And it's not good, I agree.
Okay, all right. Mark, we leave it at that. Thanks a lot for joining in and taking us through your views. That's Bank Julius Baer. Let's slip into a quick break. On the other side of the break, our entire research team will be joining in to help us with a list of top 10 stocks. Stay with us. Welcome back to Bazaar Morning Call. Lots of stocks in focus this morning. So without wasting any time, let's go across to our research team. Bharti Airtel is the first stock on our radar. Reema has more on that. Reema, over to you.
Hi, thanks so much for that. So what we've learned is that Bharti Airtel has gone ahead and increased the entry-level pricing in 2 circles. Now, India has 22 circles. In a staggered fashion, over the last couple of months, Bharti Airtel had increased the entry-level tariff prepaid plans in 17 circles, 17 out of 22. Now, they've taken it up 1 notch higher by extending it to 2 more circles. Those 2 circles are Maharashtra and Kerala, which basically means 19 out of 22 circles have seen the entry-level prepaid tariff increase go up. 3 circles are still left where they have to effect a price increase. But remember, these are entry-level, prepaid tariffs. The increase in the ARPU, therefore, does not become very significant on an overall basis. Although the price hike appears to be very steep, because earlier the entry-level tariff price was, I think, 99 rupees. It now comes to 155 rupees. So optically, it's a very large increase, and it will hurt the people at the lower end. But from the India mobile wireless revenue perspective, according to Morgan Stanley, the benefit will only be to the tune of 1.3 to 1.5% when you look at it on a pan-India basis. That's when they hike it across all the circles. The bigger trigger will be when 4G tariffs go up, because those are the higher plans, the higher priced plans, and when they go up by 10%, 20%, it directly flows through and boosts their top line. So this is significant because Bharti has taken the first step in increasing the tariffs. They're extending it on a pan-India basis, almost there. Competition is not followed, so we'll watch the competition response. But this is what we've learned. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, I'm watching ACC as well as Ambuja Cements. Both their facilities in Himachal Pradesh will restart today. Remember, both these facilities were shut in the middle of December 15th odd, because there was a dispute with the truck operators out there on the freight rates. Now, the new rates have come in there, and the new freight rates for the 12-ton truck, well, that's coming in a little bit lower, and also they have revised the rates for the 24-ton truck. The management says that the revised rates will result in a 10 to 12% reduction in freight cost. Well, it's good for them, right? Because this constituted close to around 10% of the consolidated volumes of consolidated capacity, point number one. The second factor is both these two units were relatively more profitable. So that's good news as well. In the interim, they were producing at other units and sending it to Himachal Pradesh so that they don't lose their market share. So they'll save even on that front. So positive for both these two companies, but I'll be interested to see what happens to the other companies, because there was a bit of a shortage that was playing out there. And just a few days ago, there was a price increase in this region of around 10 rupees odd. So can this price increase hold out? Is demand strong enough? Well, we'll have to keep an eye out on that. But for the time being, ACC and Ambuja should open up well in the green.
Okay, I'm also tracking two stocks this morning. One of them is Minda Corp. They had a conference call last evening at 5 p.m. and they have made it very clear that the investment that they're going to make in pre-call of around 15.7% is purely a financial investment. They also said they will continue to be just a minority shareholder with no special rights in pre-call, and they are exploring all other opportunities going ahead as well. So very, very clear that it will be purely a financial investment. Now, the long-term debt of the company stands at around 150 odd crores. The short-term debt at 350 crores. Post investing in pre-call also, their debt to equity will not be too high. They're comfortable with around 0.3 to 0.5 times. They are very bullish on the growth prospects in the instrument cluster segment, and that's a segment in which pre-call has a majority market share globally. So they've talked about how the two-wheeler analog cluster currently costs about 400 rupees a unit, but now that there's this transition to digital clusters with respect to telematics, integration, etc., the kit value could go up to almost 4,000 rupees a unit from 400 rupees a unit. So that will be incrementally beneficial for Minda Corp. Hence, I'm going with green. They continue to focus on other inorganic growth opportunities. So they're not done with acquisitions just yet. They have cash flow generating ability to fund these acquisitions, and currently the balance sheet is very strong. So green for Minda Corp. The other stock I'm looking at is Indigo. In fact, all the aviation companies, because there was record air traffic that we saw in the month of February. In fact, domestic aviation operations hit a new high post-COVID, with the average daily domestic air passengers in February increasing to around 420,000. This was from an average of around 410,000 in December. The number, in fact, peaked at 4.44 lakhs on the 19th of February. So higher corporate travel, higher travel for marriage purposes, etc., have all resulted in record high numbers there. So going with green for Indigo.
Holidays, Sonia? You said corporate travel, marriages.
That time will come.
Okay, all right. Things are looking solid, aren't they, in terms of the air travel numbers, as Sonia pointed out. More stocks with news flow. Vivek is here with that list. Vivek, hi, morning.
Well, good morning. Keep an eye out on the entire power sector. Now, what's actually happened is that the Ministry of Power, in anticipation of the rising power demand, and especially, this particular year in April 2023, they are anticipating a peak electricity demand of almost 229 gigawatts. Now, keeping that in mind, they have invoked Section 11, which basically says that all of the coal importing power plants will now have to operate at full capacity. Which are the stocks that will be impacted? While the entire power pack will be positively impacted, two stocks in particular, Adani Power as well as Tata Power, who have operations at the Mundra coal power plant, which import coal, will be most positively impacted. In fact, there is a past precedent to this particular Section 11 being impacted. From May to December 2022, Tata Power and Adani Power's imported coal plant was allowed to do a complete pass-through of the cost, which impacted their EPS positively. The other stock on the radar is Kotak Mahindra Bank. Bloomberg reports that the company has gone ahead and tapped a global management consultancy and a search agency firm called Egon Zehnder for the fresh CEO search that the company is currently looking at. And lastly, keep an eye out for GR Infra as well. The company has emerged as the lowest bidder for two projects in Uttarakhand. Total project cost of a little over 3,600 crores.
Okay, thanks a lot for that, Vivek. Well, let's get you a recap in case you missed out on these stocks. Stocks with positive news flow. There's Bharti, ACC, Ambuja, Tata Power, Adani Power, Kotak Mahindra Bank, GR Infra, Minda Corp, Precall and Interglobe Aviation. While guess what, guys, there are no stocks on our radar with negative news flow, but that can't be the case. Of course, there's more positive than negative news this morning. But let's get a quick handle on what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. And somehow there are no negatives in commodities as well right now today in the morning. You look at the crude oil prices for a second straight day, we are trading in the positive here. There is optimism about China transportation demand. Also, the new Chinese refiners are now coming on stream supporting the prices here. Same is the case with the metals, where markets are watching out for China National People Congress in the month of March, and that it may announce further stimuluses. Also, the China new home sales grew for the third straight week in 16 major cities. That seems to be supporting ferrous and non-ferrous metals. So whether it's zinc or copper, they are yet again trading near their multi-month highs. And for ferrous metals like iron ore and steel, we are trading at 7-month highs for both of these right now.
All right, Manisha, thanks very much for that. Appreciate it. Sonia, you were talking about the fact that we have all green stocks. I was wondering how Minda would really open up, because I mean they've said that, if you remember last week we were saying that what's the logic of kind of going ahead with this, right? I mean, the promoters don't want to sell, and if this is just a pure financial investment, I mean, what is a financial investment for Minda Corp? I mean, why do this, essentially, is the question. And I think that's something which people perhaps may wonder.
And if they wanted to build, if they're so bullish on the instrument cluster business, they could have just invested that money in their own capex and perhaps built their own business.
Or maybe there's more in store, because when the promoter of Precall joined us, they said they had 16-17% backing them. Will some part of that move to Minda Corp? Well, time will tell. But I recall Minda Corp, when they raised money in 2018, the street was quite disappointed that they didn't do anything with the money, for the last few years. And that's why in December 22, when I invited them and asked them, is inorganic route? He said, maybe, maybe not. Now they're doing something, but they don't have a majority, they don't have a both seat. So what are they trying to do with this? Time will tell, but I guess there's a bigger plan.
You're not at 26%. You don't have control. I mean, so with this as a financial investment, I mean,
maybe there's a bigger plan.
But Minda themselves is saying this is purely a financial investment now. So at this stage, they're saying it's not like Precall. Precall doesn't want to sell. Minda is saying this is a financial investment, but there may be an Act 2 which we don't know.
But I'm sure there's something in store, because if you look at both the businesses, they're so synergistic, and Precall it's the second largest player globally. So if Minda wants to scale up in that instrument cluster space, I guess they just need to perhaps go ahead and raise their stake.
Our colleague Sonal Sachdev had put out a piece over the weekend looking at Minda Corp's own history, operating performance, etc. And it's uninspiring. I mean, over the last 10-15 years. So, I mean, the simple point is, I mean, their own business needs to come up to a certain level and not acquire other businesses. I mean, that's one way to look at it, but we'll see. So that's Minda and Precall. The story continues. Maybe it kind of takes a bit of a backseat with the clarification on the con call yesterday. For now, we'll take a break. We have Prakash Devan join us, and we'll kind of pose some of those questions with him. He looks at the auto space closely. And of course, we also have the management of KC International to talk about their new order wins. Stay tuned for those conversations in just a bit.
Welcome back. You're watching Bazaar Morning Call here on CNBC-TV18. Well, plenty of stocks to discuss. Prakash Devan joins us to help us out with just that. Hi, Prakash. I wanted to ask you about this deal between these two auto majors. That's Minda Corp, which we were just discussing, hasn't done anything in terms of a stock price move or even in terms of results for the last many years. And Precall. Now they're saying that they've got 15%, but it's just a financial investment. How would you read that? As a shareholder, would you be disappointed? Or would you be thinking there's a bigger plan here on? Maybe they somehow get to around the 26% and then, in fact, they push from there on. Your view?
Good morning, Nigel. So, I think as we kind of see this entire transaction unraveling, it would start kind of pointing to a different direction. And, this 15% could start off as a financial investment. And possibly, the fact that there is a significantly large owner, a private equity fund that owns equity in Precall, that could kind of, swing the way of Minda to kind of, get better control or more control of the business. But the kind of hostility that's very clearly evident, the undertone of the pre-call management, the defiance to this entire idea of doing work together is a big deterrent for any shareholder. I mean, if I were to be a Minda shareholder and my company is going ahead and buying something which is not willing to sell, or somebody is not willing to sell, and then trying to make some meaning out of it, it's going to be complex. So they have a balance sheet which allows them to do certain things. And the other thing you need to understand, the backdrop of auto ancillary business is that unless you have scale and you are one of the top 2-3 players in that space globally, you really don't have that kind of pricing power. I mean, if you are one of those down the chain, OEMs can push you into such wafer-thin margins that it actually becomes very difficult. And that's precisely what's happened with some of the Indian companies which have gone ahead and acquired businesses to just leverage on scale. You've seen some very successful businesses like Motherson Sumi as a family keeps on doing that. You have Suprajit that did it so well. So, there have been instances in the past which could have encouraged Minda to cover up its lackluster performance and probably scale up. But I'm not very excited in terms of looking at buying any of these at this point in time.
Okay, in fact, Nirmal Bang downgraded Minda Corp this morning, and they talk about how they are concerned about the capital allocation strategy of Minda Corp. The fact that they have utilized this money to buy stake, which is just a financial stake, and now they're foregoing the interest income. They are also perhaps looking at weaker return ratios, and this is an EPS dilutive deal. So they have downgraded Minda Corp this morning with a target price of 224, which is still above the current market price, but they're quite cautious over there. I wanted to also ask you about Bharti and the latest that we've seen. I mean, Rima was just talking about how the entry-level tariff has been hiked in 2 more circles now. At this 780-800 rupee price, is the risk-reward favorable for investors?
Sonia, so, interestingly, what Bharti is doing is it's kind of finally fired the first salvo in terms of testing waters out, dipping their feet in terms of how, this would kind of impact. And then remember, the choice of these circles is very interesting. These are circles where they have much more linearity in terms of, the impact of the price on the demand. So it's got a very clear indication that they would want to gauge how this works before rolling this out in some of the other circles. Interestingly, if this goes off well, you'll probably see a slew of price hikes. I mean, a rollout in the other circle very aggressively. Now, does that make only Bharti interesting, but it also paves the way for Jio to follow suit, right? I mean, there's no reason why Jio, with its far more superior coverage and service bouquet, cannot do that. So it's going to be interesting in terms of this thing. So everybody's going to look at how this is accepted in terms of this thing. Does it dent demand in any way, or but this is right now, it's just about 1.5% in terms of the creative value, but it has a far more bigger ramification. So to answer your question specifically, does Bharti make sense to buy? Well, it does. There is a long-term secular trend where, as the number 2 player, it continues to offer great value as a pure service provider. But, I still like Jio, and hence I like Reliance because of other optionalities that combine. When you buy a Reliance stock, you're buying into some great businesses at great prices. So, I would still prefer that. But yes, Bharti might start looking up, and then you could start getting upgrades because the visibility of revenue and earnings will finally start falling in place.
Okay, all right. Well, the stock has not done much actually in the last 6 to 12 months. It's been pretty range bound. I mean, it's had its fair share of ups and downs, as you can see on the chart. But 12 months, I think it's a 10% gain that Bharti has seen. Just stay on, Prakash. What are your thoughts on KEC International as well? We have the management joining us now. Yesterday, the company announced order wins worth over 3,000 crores across its businesses. With these orders, KEC International's year-to-date order intake stands at a record level of over 18,500 crores. To discuss more on these order wins, Vimal Kejriwal, who's the Managing Director and Chief Executive Officer at KEC, joins us now. Mr. Kejriwal, good morning. Congratulations on these fresh orders. But tell us, would you like to scale up your order inflow guidance for the full year? Because year to date, your order wins are already at 18,500 crores. And earlier, you had said it would be between 18,000 to 19,000 crores, which is your full year guidance. Would you stick to it? Would you raise it? And what is the outlook for FY24?
So good morning, Sonia. I think the order intake is 18,500 plus we have an L1 of close to 4,500. So clearly, we should cross the 20,000 mark. We've generally been talking about between 18 to 20, so I think we should be on the upper range of the band. As far as the next year numbers are concerned, we have been talking about a growth of around 15%, both in revenue as well as in the order intake.
Okay, all right. Hi, Mr. Kejriwal. Good morning. What about margins, sir? What kind of margins will you be enjoying on this sort of order? And also give us the duration that you have to execute this particular order.
So these orders are, we did not talk about the orders. So broadly, a large part of these orders are from the Jal Jeevan mission, So these are water pipeline orders. So these will be typically around 24 months or so. It also includes our first commercial venture, commercial building in West Bengal. That's roughly, I think, 15 months or so. And an oil and gas pipeline, which is again 15 or 18 months. So broadly, revenues will start accruing in from Q1 onwards. And margins, I think, typically margins on these projects would be between 8 to 10%.
Okay, 8 to 10% margins on these new orders, right?
Yeah, yes.
Okay, so this 15% growth in the order book for FY24 that you have projected, can you just tell us where is the order visibility coming in from? Are you seeing larger number of orders come through from railways, for example, where the government has a big focus area now? What are the nature of these orders?
Unfortunately, railways, at least for us, has been a bit of a laggard in terms of order intake also. Right, with the current budget which has been announced and the increase in the capex outlay, we do expect that there will be an increase in the tendering, etc. But I think from the day the budget is tabled and by the time it gets converted into tenders, etc., it takes around 2 or 3 quarters. So I think the tenders will start coming into Q3. But we are seeing a large amount of tenders in our traditional T&D business as well as in civil. So I think these are the areas where the growth will come from.
Okay, all right. Let's talk about civil then, Mr. Kejriwal. I recall we talking about when KEC was doing roughly around 1,000 crores odd in terms of revenues. At the 9-month mark, you've already done 2,200 crores in civil. And you're getting a large chunk of orders from civil, and that's showing some traction as well. So give us an outlook on civil. From here on, where do you see this year ended first in terms of revenues on civil? And since you've got a good order pipeline, next year, how much will civil grow by?
So, Nigel, our civil order book, if I'm not mistaken, is roughly around 11,000 crores, including the current orders. So this year we should end up roughly, I think, approximately around 3,500 crores should be the revenue from civil. And next year with the order backlog, we should have, I think, almost a 50% growth in civil. So we should be at least around 5,000 crores in civil in revenue next year.
Oh.
5,000 crores in civil in terms of revenues.
Yes.
And what are the tenders that you are participating in over and above what you have done already?
So civil would include all sorts of tenders. That would be railway, metro tenders, metro stations, viaducts, water, data centers, a huge amount of residential tenders. Industrial is, I'll say, slightly on the lower side, but residential are large. And public spaces, as we call them, government buildings, large buildings.
Okay, all right.
So so in these, you said 5,000 crores of civil revenues is what you're looking at. Is there scope of increasing your margin profile here? Overall, would the blended margins go up?
So hopefully next year the margin increase will come more from civil, because most of these orders, Sonia, has a sort of a pass-through on cost. Civil has a better system of pass-through, etc. So generally what happens in civil is you are able to sort of maintain your margins at which you are quoting. So and also the working capital surprisingly is better.
Okay, all right. Mr. Kejriwal, let's focus on the Brazil operations. I think last time you mentioned that you'll start reporting an operating profit from Q4. But on the PBT level, it'll still be a loss, right? So when does the PBT as well turn into the profit for the Brazilian operations? And since you mentioned operationally you'll do well, I just wanted to understand what is the debt in the books of the Brazilian operations? If you could give us a rough number, and the borrowing rate as well for that debt in the Brazilian operations.
The debt, I'm not sure, but I think it's roughly between 400 to 500 crores. That's the number of the debt. And basically it's a loss funding which happened over the last couple of years. So that's been funded by debt. The interest rate there is typically between 18 to 22%.
Yes.
So, which is where I've been saying that we'll have an operating profit, but we'll have a PBT loss because we will need to restructure that balance sheet, and we are working on refinancing the debt. Okay.
Okay. So when do you turn to PBT profit then, Mr. Kejriwal, in Brazil?
I think we expect that hopefully by Q2 end or Q3, we should be PBT positive because by that time, we would have refinanced that entire debt, etc. The second piece is that, Brazil is part of our SAE operation. So SAE has Brazil as well as Mexico. And Mexico is also doing well. So I think at a combined level, we should become PBT positive by Q2 end or Q3 in any case.
Oh, that's great to hear. So Q3 FY24 is when you'll be PBT positive in the Brazilian operations, correct?
Yeah, yes.
Okay. Can you tell us what's happening with the Afghanistan project as well? I think your collections of about 260 to 300 crores was stalled. What's the status today?
So right now the money is still stalled, but our expectation is that in the current quarter, we should be getting around 200 crores from a couple of people, one of the lenders, one of the insurance agencies, etc. So I think a large part of it, as I said, around 200 crores should come in by this quarter end.
Okay, we leave it at that, sir. Thanks a lot for joining in and speaking to CNBC TV18. That's Vimal Kejriwal of KEC International. Prakash Diwan is still with us. Prakash, the problem here is, if you look at the stock, say over the last 2 years, right, it has done nothing. 2 years back, the stock was at 400. Today, the stock is at 480. You think there's anything here for investors?
So, all these numbers, and especially the kind of build-up on order book and all, definitely seems very promising. But remember, this is a business, Sonia, which comes with a huge level of lumpiness, and margins are always at ransom. There is no way you can you have the ability to stretch margins beyond. In fact, I heard him talk about 11%, 11%, which is fairly impressive. But the corollary to this is, if you ask me, what do I take away from this conversation? The sector is booming. People who are in this space are doing so well, and look at just flip it and look at what the leader is doing. So what KEC is getting a lot of the business is what L&T is letting go of. And if you take the likes of L&T, they have chosen to they've decided to go for business for contracts which are very high on margin accretion. Now, if they are talking about KEC is talking about 10, 11%, and if L&T manages to get 12, 13% on some of the larger contracts that they are executing, you can imagine what that could do to L&T's order book and execution. So go with the leader. You will probably have less ups and downs and a very steady flow of sorts. KEC, of course, is as you said, is still in a formative growth stage where it has to establish. But it's a great franchise. There's no doubt they have great execution skills. But when you have an L&T available within the same space, I don't know whether KEC would make the grade at this point in time.
Okay, all right. Prakash, just stay on. We'll take a quick commercial break on that note. Lots more coming up on the other side. Before we slip into a break, let's tell you what's lined up in the next half hour of the show. We'll have Anuj coming in just a bit to give us a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. We'll also decode the stock rally with our Momentumizer segment. At 9:10, Nimesh will be there with the standout brokerage report of the day. And before the market opens, in CNBC TV18 Stocks Board, we will highlight the top stocks in the news to focus on for the day. Welcome back to Bazaar Morning Call. Anuj is here bright and early this morning to tell us about all the cues to watch out for. Anuj, so lackluster, right? This market just seems to be not moving anywhere. But there was that intraday big fall we saw yesterday. So do you reckon that the bulls have a little bit of, they've tightened their grip? The bears have tightened their grip on the market now?
Sonia, good morning. Nigel, morning. Clearly, this is a market where there's a sectoral problem, and that problem is actually in the biggest sector, which is the Bank Nifty. And we spoke about it yesterday as well. And the Bank Nifty has actually now fallen 8% from its highs. But the problem is, deeper. If you look at SBI, it's almost in a bear market territory. And SBI was a leader of this market, 17% down from its highs, below its 200-day moving average. ICICI down 11%. In fact, if it wasn't for the IT sector, which has clearly been in a bit of a bull market of its own, like we've been highlighting, in fact, 20% up from the lows, this market could have had bigger problems. How much more will the Bank Nifty drag? I think that is the big question. On the Nifty, it sort of tried to defend the 20-day exponential moving average yesterday, but broke it, and after that we saw further decline. The 20-day exponential moving average is placed at 17,888 and 20-day simple moving average is 17,838. So this 50-point zone, I think, is sort of last remaining support. And as I said, only IT is preventing it from being, beaten convincingly. Next level to watch, I think, is the 200-day exponential moving average of 17,643, and the texture clearly is sell on rally. And the bank nifty is really bearish. The close yesterday was so bearish. I was looking at some data points. It marginally defended the Feb 2nd close. Why is Feb 2nd important? Because it was the day after budget. And those 3 days, January 31, 30th, 31, Feb 1 and Feb 2, you remember, were very volatile. Last remaining support zone, 4,300 to 4,500. But I got a feeling that, this market is headed towards at least the 200-day exponential moving average of 4,100 and maybe even 200-day simple moving average of 39,100. The screen is saying it loudly. Let's see if it happens. Of course, won't happen in one way, but the texture is quite weak.
Okay, all right, noted that. Thanks a lot for that. Anuj, texture is quite weak on the indices and particularly the Nifty Bank. Well, let's get in Sudarshan Sukhani as well as Mitesh Thakkar. Good morning, gentlemen. How are you all feeling this morning? Sudarshan, you go first. What's the trade on the index?
Well, the index disappointed yesterday. The idea that 17,900 for the Nifty would hold as support was there only for the first hour. After that, we had a steady decline. 17,900 was broken decisively. So any prospect of a significant rally have receded. I'm not looking at a big move on the upside. Now, what is possible theoretically is that we can see a relief rally. We have fallen for 3 days. Maybe the markets will try to say, okay, let's see how much higher we can we go up again. So today should be only an intraday trade. Assume that it is possible we may see a relief rally. If you see the markets stabilizing and going up, don't carry positions. Take a long trade with a very tight stop. And if you see the markets sliding below 17,800, then take a short position, again intraday. This is not an easy day to trade, but keep it intraday and take any one position that happens first.
Okay, so keep it intraday. Mitesh Thakkar is also with us. Mitesh, very interesting, right? Banks have now started underperforming and IT has come back in a big way. So the leadership has sort of changed in the market. How do you deal with that? And what is the prognosis for the day?
Yeah. Good morning. So I think, the observation of IT in bank is, I think, very strong. The IT index really looks to be getting into a strong outperformance versus the banking index. And I think next 6 to 8 weeks, which is about 2 to 3 months, my sense is that I think you will see more traction happening in the IT names, especially the mid-cap IT names. I think they're looking very promising, persistent emphasis, not exactly mid-cap, but somewhere between the mid and the large caps and FSL, etc. So I think IT names will do well. But on the index, my broad belief is that despite the negative candle yesterday, we still don't have any clear or a strong sign of expansion on the downside. So broadly maintain that range-bound kind of an outlook. 17,700, 750 on the downside should be a strong support. And 18,100, 150 remains a very significant hurdle for the index to cross. So I think possibly till the expiry and then, towards the month end, we might not see a big direction move happen unless until we see a break below these levels.
What about individual stocks then? What are we looking at? Mitesh, what's on your list?
Yeah. On the stock side, I have a mix of buys and sells, 2 buys and 2 sells. HAL, I think after the big breakout in the last 2 days has kind of given a pullback. So good levels to enter now. 2540 should be the stop loss, 2700 to thereabout should be the target for the stock. The other one is from Cement Pack, that's Ultratech Cement. I think all the cement companies has had a good run and Ultratech Cement made a fresh swing high. This is a buy with a stop at 7350 for targets of 7600. While on the sell side is Nestle. Keep a stop just above 19,000 levels. Look for 18,350, 18,300 as the target area. And Maruti, some minor breakdowns or negative setups have happened on the hourly charts. That's a sell as well. Keep a stop at 8760. Look for targets of 8550.
All right. Thanks for that, Mitesh. Sudarshan, what about you, individual stocks?
Well, first I start with Deepak Nitrate. The stock has been in a mini bear market. Now, it is possible that the stock may now finally be finding its feet at the lower side. So we are only trying to see whether a buying opportunity has arisen. We'll know only later. It's worth buying into and finding out. Keep a tight stop under 1740. IGL is a buy. IGL has been a strong outperformer. That outperformance should continue. It's in trading range. I'm assuming it will break on the upside. Buy with a stop under 422. ONGC is another outperformer. It's good to focus and stay with outperformers in this market. So buy that with a stop under 119. And Indigo is an intraday short. The stock has fallen all of a sudden for the last 10 days consistently. So look to go short with a stop above 1892.
Okay, all right, Sudarshan and Mitesh, thanks a lot for that. Let's do one thing. Let us take a quick break. On the other side, we'll have the pre-opening rates. We'll also discuss what's happening in the pharma space. Cinderella Carvalho of GM Financial will talk to us about the moves that we've seen, especially in spaces like in stocks like Cipla and the fall that we've seen in Divi's. A lot of that coming up.